Hi and welcome back. This is another video update, and now we're going to talk about the last update. Everything is happening, and it's very risky environment. We are seeing weaknesses in the cryptocurrency market as we warned in the last update, and we are seeing weakness, especially the Bitcoin, which is behaving like gold and silver, that very stable now. They are going nowhere. It really looks like the precious metal investor community environment now. It's not all the mood and all the happiness that was all the Lambo, all that special bubble behavior in the cryptocurrency market, which is completely vanished now, and we are seeing a more prudent, more stable. And this is what happens when the Federal Reserve says game over with the music and the chairs game. So the Federal Reserve has a very nasty situation. They have inflation exploding in the United States, and they had to make some act and crash everything and keep things under control. So if you check the prices in the gold market, in the precious metal market, we saw here all the here, and we check here the charts. We saw all the weaknesses in the last update, and if you check here, Bitcoin is still weak, showing weakness, and that the behavior may continue going down because the charts are still bearish in daily charts, in weekly charts, and in monthly charts are not particularly telling us a bullish story. So we have the Federal Reserve rate hikes coming back, and we saw some volatility in the Baltic Dry Index, all the shipping rate index going up and being destroyed back again. So like the market is, I was talking a lot about the previous updates about multiple forces working, some movements in the market going up, and at the same time we saw maybe smart money fighting the inflation trade and saying, hey, this is not going nowhere, selling Bitcoin the highs, selling crude oil, and the most important community like the Wall Street silver community, in terms of inflation expectations, they all got quiet because silver did the impossible. With high inflation, silver went all the way back to 21. So if you remember my videos at that time, I was warning and the fake silver shortage, that everything was fake, and I was very heavily attacked by the silver community. I was expecting silver to behave properly and hold the 24 level. That was my area that I said, well, okay, silver still has a chance to survive in 2021 if it holds 21. But in the previous videos, I warned that silver was also bearish, and maybe 21 and even 18, maybe 18. So all the fanatical silver stacker gone mad with me, but I was saying, hey, silver is risky and it's behaving badly, and that's exactly what happened. You can check the Reddit messages at the time. I am a silverback. I love silver. I have some Argentinian precious metal coins as a tiny collector, a tiny percentage of my wealth, very tiny. And the silver market in Argentina got completely destroyed by COVID. First, the silver market is non-existent. A very tiny market. Most of the old collectors that were giving liquidity to the market, they retired thanks to COVID. So the silver market in Argentina went extremely low. I'm talking about 20, 30, 40 sellers tops. major sellers of precious metal sellers, and it was 50-60 sellers. So if you believe that precious metal will protect you when the markets get illiquid, you better understand that you have to be very selective with the type of currency, the type of precious metal coin, or the type of or investment, because you are going to have some stress market if the Federal Reserve increase interest rates. All the music stops, and the chair games gets harder, and you see all the happiness in all the NFTs game and all these games happening in the DeFi world, where they using extremely high interest rates schemes, arbitraging, all these schemes. All that thing works when you have liquidity. Once liquidity stops, the game is over. Everybody is running, and you get exposure with a currency that may pay you an interest rate very high, and you get a crash in the value of the currency. If you don't have a hedge against your assets, you get destroyed. So this is what could happen with all these DeFi bubble, carry trades, and all the people who is stacking some shit coins and creating a loan with that and taking income with high interest rates, and then they take and move to the next shitcoin. All the game is okay until liquidity goes down. When the liquidity goes down, you keep holding the bag, expecting an income, but your assets, you get destroyed. So that's a risk, and I saw that happen 10 years ago with some cryptos or virtual coins at the moment of the real estate bubble. And now we're seeing some bullish behaviors and moods being calmed down, and this is the first moment to stay alert, because you see here in the chart, and I'm not been trading lately, so I'm very neutral. And you see the behavior in silver retesting very important level, which is 21, and it's a key level from 2 years. So silver is about to say goodbye to all the gains with the COVID crisis, all the money printing. Everything is going to disappear. Should silver cross the 21, we are talking the next level. I warned the previous video that we could go as low as 18. The level is 18. So if the Federal Reserve keeps pushing, we may go there. And the charts of silvers are very not convincing, so silver is in a do or die mode now. So we have that in silver. You have the stock market. The stock market here, you will see, let me remove the news so you see better. The stock market is also moving sideways with all the information that we are going to go higher and higher, and we have some days of neutral, so the market is still neutral for 2 months now. For 2 months, we are not seeing on the inflation expectation. We are all excited, but this game is not that easy. So some traders are assigning that some cash reserves, and that's okay. What's happening with gold? Gold is showing some stability in the 16th, which is the real technical support from gold, is 1600. The area is 1600, and we've been testing that area. Sorry, one sec. Testing that area in March. We've been moving sideways, so the really hint in the gold market, I see the way I see the charts, that we are still in sideways movements, but this is more confusing. But the chart of silver it's much more clear that the risk is very high now. It's a do or die. You can say, well, this is a flag, this is going up, or whatever you want to say, but the chart of silver is much more clear that it's a do or die mode. And the way that the moment we have that after a big bullish market, the Federal Reserve is still acting, is still about to act, it means that silver could really get crushed, and gold, may not be a flag, but the start or the continuation of more corrections in the gold market. So we should expect silver, if silver goes below 21, we could go all the way back to 18, and gold should test the 1600 level. That's the main risk in the precious metal market, and it really looks bearish so far. So inflation should be healthy distributed in all the key indicators for the market. And when we saw very violent pullbacks in the key indicators like food prices, the DVA ETF, the food ETF, or the BDI, the Baltic Dry Index chart, which was warning a big movement, and then it crashed back to the same area. So I said these new forces, smart money selling, and maybe retail money buying the inflation game, and we have these two forces fighting. As I saw that maybe Black Swan, whatever. I saw something was not working with the inflation strategy, and I've been warning that. So what works in this environment works cash looking, and works to what are the professional traders doing. You maybe check your strategies and forget about the inflation game and just trade the charts with a speculative strategy, tested and back tested for this type of market. So we have a market that could move sideways, but I don't believe it will continue to move sideways. But the main driver that will remove the market from this somehow sideways move will be the rate hikes. So everything is happening because the Federal Reserve is taking action and say, I am going to remove liquidity, or I'm going to threaten the market, at least with the rate hike. So the game is just starting, and we will see how many quarters the Fed will continue to keep the pressure in the market and keep the prices controlled for now. So this is the main risk. And also we see all these mandatory vaccine mandates everywhere that is creating some uncertainty in the labor markets globally, and this create maybe supplies, it could create some supply and demand issues at the same time. But in the core of this problem, it's like deflationary, because we have uncertainty, and uncertainty means in the short term. Uncertainty means cash, and uncertainty means selling, and rate hikes, from the way of the chart, looks for more selling in some assets. So for precious metals, there is still high weakness in all the time frames. I still see weakness. The weakness we saw in the last update was correct, and it should continue this weakness until we hit the key levels and see what is the price action there. So this is the quick update. I will tell you more about what's going on. Thank you very much.